step back lah. Okay, so the point is on the valuation of Hyacinth Co's inventory. Okay, be specific to the scenario again. Okay, to summarize, okay, right now we are talking about the work in progress and finished goods. So the first risk here is on the percentage of completion, right, guys? The risk that the percentage of completion is not accurate or not correct. So whenever there is a management estimate, okay, this percentage of completion is again just a management estimate. So we discuss with the management on the basis for the percentage of completion to assess the reasonableness. Again, remember to include your purpose. Okay. Next is for the valuation. Okay, another thing can, when you guys are doing valuation, it's useful for you guys to think of how do we get from the opening inventory all the way to the closing inventory. How do we calculate this inventory valuation? Okay, opening inventory, and like Alia said just now, right, we will minus any write-downs. Okay, any write-offs. Okay, write-downs and write-offs because of obsolete stock or because of, usually on the obsolete stock. Minus any write-down, minus any write-off. Okay, so this is just an example of how we can get to the closing inventory. Okay, so it helps for you guys to note how do we calculate the closing inventory. Okay, this applies for any SP when you are focusing on the valuation. Try to think of, okay, how do I calculate the closing balance for this account? Okay, so right now, okay, so just now we talked about, next is on the total cost. Okay, total cost of the finished goods. Okay, total cost of the finished goods. So right now, the finished goods total cost will consist of direct cost, labor cost, and production overhead. Okay, so this details of this direct cost, labor cost, and production overhead, you can obtain the cost card. Firstly, you obtain this cost card, and then you want to agree this back to the purchase invoice for the direct cost. Labor cost, we will confirm by reviewing the timesheet, and the production overhead, we will basically want to confirm that it is production in nature. Okay. So we will obtain the cost card for the finished goods and work in progress, and we will inspect, we will agree the direct cost to the purchase invoice, okay, and agree the labor cost to the timesheet, and agree and maybe confirm the breakdown of production overheads to confirm that they are production in nature. Okay, guys? So this is basically addressing the risk that the costs are incorrectly valued. Okay, so just now we talked about any write-down or write-offs. Okay, write-down or any write-offs. Another way, let's look through the scenario first. Before goods are dispatched, they are inspected by the company's quality control department. Just prior to the inventory count, it was noted that a batch of product line Crocus, which has been produced. Okay, so how we want to be more specific to the scenario, right? Make sure you guys talk about this Crocus in your product also. Okay, which had been produced to meet a customer's specific technical requirements, did not meet that customer's quality and technical standards. Okay, so what is the risk right now, guys? That is a risk. Okay, wait, let's read through the full scenario first. This inventory had a production cost of 450K. Upon discussions, the finance director believes that the inventory can be sold to alternative customers at a discounted price of 90,000. Okay, so there's a few things that we want to address just specifically on this Crocus here. Okay, so on the Crocus product, what is the risk right now? Okay, right now they did not meet the customer's quality and technical standards, so it has to be sold at a price that is lower, right? So what is the risk, guys? In accordance to IAS 2, the risk is that the inventory should be measured at lower of cost or NRV. So there is a risk that inventory is not measured, it's not valued correctly in accordance to IAS 2. In accordance to IAS 2. Alright, so again, what does IAS 2 state? Inventory should be measured at lower of cost and NRV. Okay, so right now, we want to confirm this. What kind of audit procedures that we can do to confirm this, guys? Okay, go back to what this IAS 2 states. inventory should be measured at lower of cost and NRV. So right now, we want to confirm the cost of this Crocus product and we want to confirm the NRV of the Crocus product. So right now, they have stated that the cost is 450,000. Okay, the cost is apparently 450,000. NRV is believed to be 90,000. Okay, so for the cost, how can we confirm that the cost is actually 450,000? Okay, we will basically obtain the cost card. Just the same thing, we will obtain the cost card of this Crocus product, specifically Crocus product. Okay, let's say detailed testing. Okay, that's correct, but I would say that detailed testing again is a very general, okay, kind of usually when we do, when we are doing auditor's response, sometimes we do the answer of detailed testing. For example, our auditor's response is detailed testing on inventory balances, correct? This is our auditor's response when we are talking about auditor's risk. However, this is a very general point, okay? Because again, auditor's response is a very vague overview of what is the auditor's plan. Right now, we want to go into detail. In substantive procedure, we are going into detail on how can we basically test these inventory balances. Okay, so you have to be more specific. On the cost, we will agree the cost of the Crocus to the cost card. Okay, agree the cost of Crocus of 450,000 to the cost card and supporting documents. Okay. Okay. Agree the cost of the Crocus product of 450,000 to cost card and supporting documents. Maybe you can say such as the purchase invoice to confirm, raw material, labor costs and production overhead. Okay. So another thing just now is on the NRV. So when we are confirming NRV of 90,000, we want to assess where did they actually get this. Okay, they said that the finance director believes that the inventory can be sold to alternative customer at discounted price of 90,000. Okay, so right now we want to confirm how do we know that the management is actually just plucking this 90,000, right? So we want to look into the post-year end sales invoice. Okay, please remember this, guys, because this is something that is very useful, not just in answering your SP, but also your auditor's response. We can review the post-year end sales invoice. Review post-year end sales invoice. Sales invoice for the sale of Crocus. Crocus to confirm the NRV of 90,000. Review the, okay, I want to highlight what is the subject matter just for you guys to be more clear. Because again, like I said, you guys might not be sure of what is the subject matter or what is the document you want to look into. So that is the main concern right now, right? So, however, this is just something that you guys will learn along the process, I would say. Okay. So basically, we will review the post-year end sales invoice to confirm the NRV. Okay, to confirm that is it true that there are customers who are willing to pay this price of 90,000. That is basically why we will confirm against the post-year end sales invoice. Okay, so right now, whenever there is an issue like this it was noted that a batch has been produced and that this did not meet the quality and technical standards. And then upon discussion with the production supervisor, the FD believes that the inventory can still be sold. Okay, usually major issues like this will be discussed. Okay, it is a major issue, so it will be discussed. So we can review the board minute meetings. Review the board minutes. We will review the board minutes to assess management's decision regarding the defective batch of products. Okay, and discuss with management what are their plans on selling these goods. So this is the next point. So we've covered a few points here. Okay. To continue on this point here, right? Okay. So right now, because this Crocus product did not meet the customer's quality and standard, right? Right now, because right now the NRV, okay, if we compare it here, right? NRV is lower than cost. The NRV is lower than cost. NRV is 90,000, and then the cost is 450,000. So what will we be required to do right now, guys? This will require a write down, right? This will require a write down. Okay, so what is the double entry? Okay, we will basically debit the SOPL for this write down. Okay, debit SOPL of credit inventory. Okay, debit SOPL by how much? Basically 450 minus 90. Okay, so we want to ensure that this is correctly accounted for in the inventory valuation. So there is a risk that this write down is not accounted for correctly. Okay, so that is the risk. Risk write down not accounted for. Okay, so what can we review in this case? Yeah, so Mimi said 360K, right? This is 360K. Okay, credit inventory 360. So right now we are talking about the inventory valuation. So we want to confirm the final adjustment. Final adjustment of 360K to the damaged product and discuss with management if the adjustment has been made. Has been made. Okay, so first we confirm the final adjustment. Okay, we have, or another thing that you can say is recalculate the final adjustment. Recalculate the final adjustment of 360K to the damaged product. Discuss with management if adjustment has been made. We cannot stop there. When we have discussed with the management on what is the correct adjustment, we have to follow through to ensure. Okay, so another thing is follow through. Follow through the write down in inventory valuation to confirm. Okay, we have to confirm that the management has actually done this or not. Okay, so that is on the Crocus product. Right, so this is basically touching just on Crocus. This is a separate point just on Crocus. So we have, how many points do we have here? Okay, we've accounted for quite a few, right? Another thing that I forgot to touch on is also on the write down or write off. Okay, for this WIP and finished goods scan. Similarly, there is a risk. There's one more risk that we forgot to address, guys. Risk that obsolete or slow moving stock not identified and accounted for. So how can we account for this obsolete stock? We will create an allowance, right? So it works similarly to the aged receivables. What will we review, guys? For example, if for the receivables, we will review the aged inventory report, aged receivables report. Similarly here, we will review the aged inventory report. Yes, thank you, Mimi. We will review the aged inventory report. Inventory report to identify slow-moving inventory, slow-moving or obsolete inventory. Okay, review the agent to identify slow-moving obsolete inventory. So similarly, even when we are answering for receivables, right, we review the aged receivables report. We will discuss with management. This is on receivables, right? We discuss with management whether an additional allowance for receivables is required. Correct? So this is basically the same thing. The only thing that I'm changing is aged inventory report. Review the age inventory report to identify slow-moving inventory. Okay, it's the same point. We discuss with management whether allowance for inventory is required. Okay, guys? So are we clear on this? Can you guys try to attempt this question? Because I said valuation, particularly inventory, is a very important and highly tested substantive procedure in your audit exam. Okay, so can I give you guys, so since this is 6 marks, I will give you guys on average 10 minutes for you guys to attempt this question, and let's discuss at 11:20. Okay, so I hope to see you guys at 11:20 where we will discuss. Okay, let's go, guys. Now it's 11:20. Let's discuss on your answers. Okay, I'm going to start off with Zakwan's answer because it's been so long since I saw Zakwan in my class. I must read through your answers now. Discuss with management on the basis for the percentage of completion for WIP to assess the reasonableness. Okay, correct. This is 1 mark. Obtain the cost card of Crocus product and supporting documents and agree the cost is 440k to confirm. Yeah, this is 1 mark. So actually kan, just on this point of obtaining the cost card and agreeing to the supporting documents kan, you guys can do like duplicate this point for the finished goods and work in progress. Okay, how can we add another point here then? Okay, how can I add another point here which is repetitive? Okay, added point is basically we will select a sample of WIP and finished goods. Okay, inspect the relevant cost card and agree raw material to purchase invoices, labor costs to timesheets, and production overheads, and the breakdown of overheads to assess whether they are production in nature or not. Okay, so it's basically at this point of number 2 here is like quite similar. Okay, so I just wanted to add this point just for you guys to know that this is 2 separate points and you guys can get 1 mark for each of this point. Even though they sound the same, but right now you are testing the second point that I've added, you are testing specifically on the WIP and finished goods. So Zakwan's point is specific for Crocus punya product tu. So you can get 2 points. Okay. Review the post-year and sales invoice for the sale of Crocus to confirm the NRV of 90,000. Yes, this is correct. Review board minutes to assess management decision regarding the defective. Discuss with management on their plans of selling the goods. 1 mark. Confirm final adjustment. Okay, so this is correct. 1 mark. Lastly, review the age inventory report to identify slow moving. Discuss with management whether allowance for inventory is required. This is last 1 mark. Okay, welcome back, Zakwan. I haven't seen you in so long. This is a good attempt on your part. Okay. So next, maybe I will look at Atika's answer. Okay, to assess its reasonableness, 1 mark. Obtain the cost card. I don't know why I can't scroll. Obtain the cost card and agree the direct cost to purchase invoice to confirm its valuation. Okay, so this is 1 mark. Maybe you can add on the overheads. We obtain obtain a breakdown of overhead to confirm it is production in nature. Okay, another thing that you guys can add here. Bring cost of 450,000 to the supporting documents to confirm the direct cost, labor cost, and production overhead. Okay, I want you guys to reference that this is specifically for cost of the Crocus. Okay, agree cost of Crocus. Because this is just specifically for Crocus, right? Agree cost of Crocus. This is 1 mark if you include the agree cost of Crocus. Okay, review post-year and sales invoice to confirm the NRV. This is 1 mark. Confirm the final adjustment and follow through. Okay, so this is both 1 mark each. 1 mark, and then you get another 1 mark for the last point here. Okay, guys, thanks for submitting your answers. Okay, I'm going to move on to the next question now. And next point. Okay, next is describe SP in relation to the Hyasynco's research and development expenditure. So what is the accounting standard for this, guys? Research and development expenditure falls under what accounting standard specifically? Okay, so yeah, like you guys said, IAS 38 intangible assets. I want you guys to be clear on what accounting standards. Okay, so IAS 38 intangible asset, right? So intangible asset, what assertion will this be related to? What is the specific assertion here? Because right now they did not ask us specifically what assertion, we can use all of the assertions related to this. Intangible asset is a SOFP item. So what assertion will we be using is pref, right? C to the power of 2. Okay, so let's try to think of each risk in aspect of each of this assertion. Okay, so what does the first C stand for, Kan? Let's try to go by assertion lah. The first C stands for the completeness. This deals with the risk that intangible asset is not recorded. Okay, so when it comes to completeness, whenever we are testing on completeness, we can use the obtain, cast, and agree. So what will we obtain, guys? We will obtain a breakdown of intangible assets. Okay, it's very easy. Just obtain a breakdown. This is something you guys can memorize. Obtain a breakdown of intangible asset, cast, and agree to. Maybe we can agree to the trial balance or the draft financial statements to ensure completeness of the intangible assets. Okay, so wait, let's go back to the scenario to read through it first. Hyacinth Co. includes expenditure incurred in developing new products within intangible assets once the recognition criteria have been met. This is something they're hinting to you so that you will also write about the capitalization criteria in your SP. Intangible assets are amortized on a straight line basis over 4 years once production commences. I want to underline here, okay? The most important for the examiner to note that you guys are actually applying from the scenario is you using as much information that you can from the scenario. So right now, you have to make sure in your answer, you have talked about this 4 years and once production commences. This is basically the amortization policy, okay? The amortization policy is based on the past experience of the likely useful lives of the products, okay? And then we can talk about the useful lives of the product. The opening balance of intangible asset is 1.9 million. Again, I'm going to circle. Okay, I'm going to circle whatever figures because I want to include this in my SP answer. In the current year, Hyacinth Co. spends 0.8 million developing 3 new products which are all at different stages of development. Okay, are you guys ready? Can we go through this scenario and think of what is the risk together? When I say together, I mean you and I, not just I. Okay? So, right now, okay, when we just look at this scenario here, okay, the risk is that, what is the risk here? The first risk here is what, guys? Risk that the intangible asset that is capitalized does not meet the recognition criteria. Okay, so right now we want to design what is the audit procedures. Okay, what is the audit procedures that we have? Can I erase this? Because macam tak muat, right? I'm just going to erase this lah, okay? Risk that in IA capitalized does not meet the recognition criteria. So we can basically do a few substantive procedures to confirm this, to address this risk, to reduce this risk. Okay, hold on, let me just erase this. Okay, so on this risk here then, so it's very, there's a lot of things that you can talk about in regards of the recognition criteria. So first, let's just recap on what is the recognition criteria, right? So we will usually use the mnemonic of pirate. I don't know about you guys. I don't know if this is the first time you guys are at least remembering pirate, but I'm sure you guys have covered this in your FR. Pirate. So P stands for probable inflow of FVB. Okay, I stands for intention to sell. R stands for reliably measured. A stands for ability to sell. T stands for technical feasibility. Wait, I think I got it wrong. R is basically on the resources. Do they have sufficient resources? And lastly is expenditure can be measured reliably. Okay, so again, why am I basically taking you guys back to remember what is pirate? Okay, this is essential for when you are actually answering your SP. You want to make sure each of these criteria is met. Okay, is met by the customer. Okay, so first things first. Okay, first things first, what we can do is we can discuss with the management. Okay, discuss with the management. Okay, discuss with management. But I think that this point I want to talk about in this line here. Okay, later on I will touch with discussing with the management. So firstly, is basically how can we confirm that they have met this pirate capitalization criteria? For example, ability to sell. Okay, we can confirm whether they have this ability to sell. Okay, is through reviewing the market research report. Market research report reports to confirm Hyacinth has ability to sell what? Right now we are talking about the what product is this? What product is this? Review to confirm has the ability to sell the computing software. Are they selling the software right now? Okay lah, I don't know. To confirm Hyacinth Co has ability to sell the product once complete plus and probable inflow of FEB will arise. Okay, so this is to confirm the ability to sell and the probable inflow of FEB. So remember guys, market research report. Okay, another thing that we can talk about is on the technical feasibility. Okay, so let's think of what document right now that we can look into. Is basically we can review the feasibility reports. We will review the feasibility reports to confirm, okay, review feasibility reports and discuss with development management. Discuss with development manager, sorry. Discuss with development manager to confirm the technical feasibility and intention to complete the project. Okay, feasibility reports and discussion with development manager. Okay, so these are the two things that you guys can talk about when we are talking about the recognition criteria. Okay, so that's why it's important for you guys to note on what is pirate, what is basically the capitalization criteria. Only then you guys can kind of like go into more depth and explain, okay, on your substantive procedure. Intangible assets are amortized on a straight line basis over 4 years once production commences. Okay, what is the risk here, guys? Okay, can you guys tell me what is the risk? We cannot proceed without knowing what is the risk. What is the risk in the case of the amortization? Basically, there is a risk. My iPad was going to fall. The risk is that, yeah, it didn't say not accounted for correctly. Okay, maybe we can be more specific. Okay, this is maybe whenever there is a calculation, this is on the valuation. The assertion of valuation. Okay, so there is a risk that the amortization is not correctly calculated. Okay, risk that IA is not calculated correctly. So when you're doing valuation, and when you're doing valuation of anything, remember, like I said just now, when we are talking about valuation, it helps for us to think about how do we calculate from the opening intangible asset to the closing intangible asset. So in this case, opening intangible asset, we will deduct any amortization, right? We will deduct any amortization and any impairments. Okay, but basically, usually we will focus more on this amortization. So going back to the scenario, there is a risk that the closing inventory, basically the amortization has not been calculated correctly. So what can we do? Whenever there is a calculation, okay, there is a risk that this is not calculated correctly, we can recalculate the amortization charge. We want to recalculate the amortization charge, okay? Recalculate the amortization charge and confirm that it is in line with what? With the amortization policy. Apply immediately, guys. You calculate amortization to ensure or confirm that it is in line with the amortization policy of what? Okay, this is where you copy paste from the scenario. Okay, recalculate amortization expense and confirm that it is in line with the company's amortization policy of 4 years. of a straight line basis over 4 years once production commences. We are basically confirming that the amortization is calculated on a straight line basis over 4 years once the production has commenced. Okay, so this is how you will answer your substantive procedure. Alright, this is on the straight line basis. Okay, another thing is basically we are thinking about, okay, another thing that I forgot to add here, okay, is basically any additions, right? Any additions. Okay, additions, for example, development expenditure. Okay, wait, maybe I can, okay, so development expenditure. So the last point, Hyacinth Co spent 0.8 million. This 0.8 million, don't forget to include this. Hyacinth Co spent 0.8 million developing 3 new products which are all at different stages of development. Similarly here, this is the same issue here, right? Basically, there is a risk that this product does not meet the development criteria. It does not meet the capitalization criteria. So we will basically have to discuss with management. Okay, one thing we can do is we can discuss with management on the different stages. We want to discuss with management regarding the development of these 3 new projects to confirm. We want to confirm the details of each project, along with the stage of development. Okay, to confirm whether this should be expense of or capitalized as IA. Alright, so are you guys clear so far? Risk that, okay, so this is basically the same thing lah. Risk that IA capitalized does not meet the recognition criteria. I would say that this is the same risk here. Okay, however, this is specifically for the 3 new products. So make sure you talk about the 3 new products in your answer also. Okay, lastly, we want to agree any cost. Okay, so maybe we can agree this cost of 0.8 million. We want to agree this cost incurred for the development of 0.8 million to invoices. Okay, you want to agree the cost incurred to the invoices. Okay, when we are agreeing this to the invoices, there's 2 things. Okay, when we are actually looking into the invoices, there's 2 things. One is we are confirming on the assertion of valuation. Next, we are also confirming on the rights and obligation. This is what we will confirm when we look at the invoice, because even in the invoice, they will state the name of the company. Okay, so this is just vaguely on the different substantive procedures. Okay, and lastly on the completeness, right? Again, when you are doing obtain, cast, and agree, this applies for all SPs. Okay, the only reason why we didn't put for Hyacinth Co inventory is because they specified valuation. This answer is basically for completeness, obtain, cast, and agree. Okay, and again, lastly, last is another risk that we have, okay, on the assertion of classification of presentation, right? Presentation. So this is like under one umbrella, I would say. Okay, so we can talk about our favorite point, guys. Review the disclosure. Whether disclosure of intangible asset to verify it is in line with IAS 38 intangible assets. Okay, so for this point here, can I give you guys some time to complete it? Maybe like 8 minutes. For the sales tax liability, I want us to try to attempt it together. So that means that I will type and then you guys will follow me. Okay, because sales tax liability is something that, okay, some people might panic because you've maybe never seen sales tax liability. However, the way of answering it is similar to any liability. Similar. Okay, so sales tax liability, we will go into it together after this. So I'll give you guys 8 minutes starting from now to submit and attempt your answers for research and development. Okay. Okay, guys. Turn back. Okay. So I see you guys uploading your answers. Let me share my screen. Okay, I will briefly look into your answer and then we can terus jump into the sales tax liability together. Okay, so let's look into Egina's answer. Obtain a breakdown of intangible assets, cast and agree to ensure the completeness. Okay, 1 mark. Recalculate the amortization charge. Okay, I like how you memang apply to what the scenario said of straight line basis over 4 years once the production has commenced. 1 mark. Review the market research report to confirm Hyacinth has the ability to sell the product and probable inflow. 1 mark. Discuss with management regarding the development of 3 new projects. Confirm the details. Okay, 1 mark. Review this. Okay, so 1 mark. Okay, so your answers are very specific, but you follow the PSP method, procedure, subject matter, and the purpose. So, lastly, Zakwan's answer. Okay, 1 mark. 1 mark here. 1 mark. Okay, so again, even though I have already given you guys the answer, the reason why I want you guys to still write it in the Padlet is actually because the only way you guys can master substantive procedures is through practice. Okay, it is only through practice that you guys can truly master this, especially for those of you who don't have relevant working experience. It is very difficult for us to actually think of, even though you've done it a few times, you may still forget. You still forget on what do we want to confirm, how are we going to confirm this. So the only way is through practice. Okay, so let's move on to the next point on the substantive procedures on the sales tax liability. Let me just share my screen. I'm just going to copy paste the sales tax liability, put it into a different. Okay, so are you guys ready for us to do the final question of the night before we end our class? Okay, I hope you guys are. Okay, so let me just do a new share screen. Okay, so let's look through the question first. Okay, so here they have basically talked about how we calculate the sales tax liability. Okay, and then they ask us for SP for sales tax liability. Okay, how many marks is this? Let me go back to the question. So this is 4 marks, so it should be 4 SPs. Okay, so let's basically, before we read through the scenario, sales tax liability, this is a liability, so it is an SOFP item. So in this case, the assertion is correct. Okay, so let's think of what is the risk as we are reading the scenario. Okay, Hyacinth Co is required by the relevant tax authority in which it operates to charge sales tax at 15%. Okay, take note, guys, we have to include this answer of sales tax at 15% in your answers. Okay, and next is basically the sales tax is payable to the tax authority. Okay, this is actually kind. Okay, it's obvious. We obviously know that the sales tax is payable to the tax authority. Okay, but something that we forget is that we can basically review the correspondence with the tax authority. So I'm going to highlight that. When purchasing raw materials and incurring expenses in the manufacturing process, the company pays 15% sales tax on any items purchased, and this can be reclaimed for tax authority. So this is on the input tax. Okay, the company is required to report the taxes charged and incurred by completing a tax return on a quarterly basis. This is also something that they are hinting for us to include about the tax return in our substantive procedures. Net amount owing to the tax authority must be remitted within 4 weeks. Okay, net amount. Basically, how do we calculate? The amount payable to the tax authority? Okay, sales tax. Okay, sales tax payable. We will calculate by. Is basically we will deduct calculating sales tax. If you guys still remember output tax, which is the sales tax on sales. Okay, will basically minus any input tax, sales tax on cost incurred on purchases. Okay, so this is how we will calculate the sales tax payable to the government. Okay. So, back to the scenario, the draft financial statements contain a 1.1 million liability for sales tax. So, a lot of it is touching on the valuation. Okay. When they say that this sales tax is charged at 15%, this is mostly on the assertion of valuation, where there is a risk that the sales tax is not correctly calculated at 15%. Okay, so we are going to address this first risk here. Okay, risk that the sales tax is incorrectly accounted for. Okay, wait, but first, before I forget, the first C is again completeness, right? So number one, I want you guys to do the obtain, cast, and agree method. And agree. So we will obtain, in this case, they have stated here, the company is required to report by completing a tax return. So we want to obtain the tax return submitted to the government, cast, and agree to the sales tax liability. So they have already clearly stated that it is 1.1 million, of 1.1 million in the trial balance and draft financial statements to confirm completeness of sales tax liability. Okay, so this is the first point here. All right. Next is basically on the calculation. Okay, they have clearly stated that this sales tax is charged at 50% on the product which it sells. So we are just going to explain how are we going to recalculate this. So we want to recalculate the sales tax incurred as per the tax return is equal to 15% of the final quarter's sales as per the sales day book. Okay? Because here they said this is on a quarterly basis. That's why I said final quarter's sale. Okay? This is on the sales tax. This is not sales tax incurred. Sales tax charged. This is basically on the output tax. Okay? So that is on the output tax. Now it's on the recalculate the sales tax incurred block. Sales tax incurred is basically on the input tax. As per the tax return is equal to 15% of the final quarter's purchases as per the purchase day book. Okay, so this is what, even though the sentence is almost the same, purchases and expenses. Okay, it's more or less the same, but we are testing two different things. Right now, we are testing the valuation of the sales tax charged here, and then this is basically testing on the sales tax, valuation of the sales tax incurred. Okay. Next is basically like I said here, right? Sales tax payable to the government will be the output tax, which is the sales tax that is charged on sale, minus any input tax, which is sales tax on cost incurred. Okay, so we will recalculate the amount payable to the tax authority as the sales tax charged or the output tax less the tax incurred, which is the input tax. To confirm valuation of sales tax liability. Okay guys, clear? This is basically just focusing on, the first point is to confirm the completeness. These 3 points is mostly to confirm the valuation. Okay? Another thing that we can do is we can perform analytical procedure. Actually, when we do analytical procedure, this is also a form of confirming the completeness. Okay? We want to compare the year-end sales tax liability to the prior year balance and investigate any significant differences. Okay? This is actually to ensure completeness, to confirm that to basically assess that no sales tax liability has been omitted, for example. Okay, so another thing is basically we can review the subsequent payments of the sales tax liability. Review any subsequent payments. Okay, where can we check if there is a payment, guys? Whenever there is a cash payment, again, we will basically review or agree the subsequent payments to the post-year-end cash book and bank statements to confirm that it has been paid in line with the terms of the tax authority. Okay, how much is the terms of the tax authority? It says that they have to be remitted within 4 weeks of the quarter end. Okay, so we copy paste this point. We paid in line with the terms of the tax authority. Okay, in line with the terms of payment of 4 weeks of the quarter end. Okay. Next, we want to review any correspondence with the tax authority to assess whether there are any additional outstanding payments due. If so, confirm they are included in the year-end liability. Okay, lastly, our favorite point, review any disclosures made of the sales tax liability to ensure that it is in compliance with accounting standards and legislation. Okay? Did you guys get that? Are we clear here, guys? Okay, so, wait, hold on. Okay, maybe we can finally end our class. So it's a little bit after 12. Okay, so I have ended it a bit late today since we started a bit late. So again, thank you guys for joining my class. So a lot of people I think have given up already halfway. So I understand that I have also had a very long day, but I'm grateful that you guys have been very enthusiastic and very participative in my class as always. So again, I want to say sorry for any shortcomings on my part too. So